markets extend a budget rally. The Sensex jumps 1,100 points in early morning session, trades above 49,700. The Nifty also trades above the 14,500 mark. To get you more on the markets, let's go across to my colleague Sakshi Bajaj.
That's right. So markets do continue to extend the budget day gains, the budget day rally. Both the Nifty and the Sensex currently trading above the 2.5% mark. They were earlier trading higher and surged as much as 3%. The Sensex even touched the crucial 50,000 mark. The Nifty did cross the 14,700 mark, but currently trading above the 14,600 levels. What we've noticed in early morning trade, though, it's a broad-based rally. All sectoral indices are trading in the green, led by, of course, financials, banks and auto stocks. So to decode this, we have Mr. Ambrish Balika, market expert. Sir, we'd like to begin by asking you, will the market really be able to hold on to these gains?
The way I see it is, it should be able to hold on to these gains at least for a few days, because most of us, including myself, were expecting a COVID test or some other means of taxation to raise funds. So no additional tax was a big relief. And additionally, I think clearly there was a focus on infrastructure to kickstart the economy, and this has been received very well. So overall, it was a decent budget, but the question is how soon we return to fiscal prudence. Because one, we are borrowing very heavily. And number two, we are not sure how well the divestment plans would be executed, as even in the current year, we have seen that the divestment target has not really been met. It's much lower than the divestment target which we had. So I would say that this was a sentiment booster budget. And since the markets had corrected very well before the budget, it had corrected nearly 5%. We have seen this huge rally. So the momentum is good. We could see the markets up for the next few days. But will this budget start a fresh long-term rally? I don't think so. We really can't compare this to the 1991 budget or even the 2004 budget where the long-term capital gains tax was abolished.
Right. So many also terming this relief rally and saying that, look, the focus will now shift to economy-facing stocks, stocks like cement, stocks like infra, and perhaps shift away from IT-centric stocks. Do you agree?
Yeah, to an extent, because this budget was basically for the infra-related sectors, and because of which you should have the infra companies doing decently well. Even for cement, I think this is a decent booster. But we should also remember that in the past couple of months, we have seen both these sectors rallying quite a lot. So how much higher from here is a big question mark. And at the same time, we could also have the auto sector doing well because of the scrappage policy. That's happened after a very long time. We've been expecting the scrappage policy for the last 2 years. And now finally we have seen the light of the day. And it's also been positive to an extent to the finance sector, especially the insurance sector. So I think we should see some action in that segment also.
All right. So the auto sector clearly cheering the scrappage policy, but any other sector you feel that the budget could have focused on?
I think it could have focused on travel and tourism, because I think that was one sector which has been badly affected by COVID and is yet to recover. And again, that's one of the biggest employers. So, I've not seen anything as far as this sector was concerned. So I think the budget could have covered that and given some sort of props.
All right. And going forward, as far as just the markets are concerned, really, which sectors do you feel will be the outperformers?
I think the outperformers would be the old economy stocks. Just like I had mentioned earlier, automobile, infrastructure, cement. But at the same time, I really don't expect the markets to really start a fresh bull run from here. We may cross the earlier highs, hold on for a while, but finally we should remember that the valuations are just a bit too high. I think the valuations are already discounting the best of what can happen in the next 1.5 to 2 years. So, I would still suggest that one should be utilizing this superb rally to book out to a large extent.
All right. So a cautious approach there. Thank you so much for joining us.